Hey guys, I'm here to review my trades from the week of May 31st through June 3rd, 2016. It was a quiet week for me, but nonetheless, let's get to it here. I made 6 total trades, starting with Tesla on June 1st. I did not trade on the 31st because I simply did not see anything that looked appealing. So looking at Tesla from June 1st here, so I bought a put on Tesla at 947. I bought a put at 947. So a couple things that I like. Number one, Tesla was gapping down coming into the day, showing some weakness. Okay, that's for starters. And then number two, clear break to the downside within the first 5 minutes of the day. So observed the signal and it took it below 220. 220 was a level I was watching, and then I saw that it was staying below 220. A couple times tried to cross above it. Each time it was getting rejected. So I got short right here on Tesla. I bought a put looking for a move lower, and I took profits on the put. I bought it at 145 and I sold it at 185, made 27.5%, which is good. Exited the trade at about 957. So that is right about here. Actually, it's right here into this move. So took profits into the new low, and I like this trade. You know, got a signal, which is something that's so important. I emphasize trading once I get a signal. My best trades are when there's been a signal. My worst trades are when I try and guess and front run a signal. So I like that I observed a breakdown and then got in after it was rejecting 220. And I also like that I didn't take profits here. I had a set profit order in to sell at 190. Ended up selling at 185 once it then broke here, and my put wasn't moving as much as I thought it could have or would have. So all in all, solid trade. Well, good job observing the breakdown and getting signals to support the idea before executing, meaning that I didn't guess or front run. And good job holding for profits. Could have taken a quick 10 or 15%, but held for the new lows and got a nice percentage return. If I'm getting 27.5%, I'm pretty happy about that. So all in all, solid trade. That was the only trade that day for me. Next trade, June 2nd, Thursday, it was on Facebook. I went long Facebook at 938 at 119.13, 75 shares. So let's look at Facebook from Thursday. Yes. So what I saw on Facebook is right away you opened up and you just ramped higher, and you got above yesterday's high, you got above pre-market highs. So I actually like my trade here. I got in right here. I got in on this dip. The first thing I like is I did not chase, which is something I did a lot of the week before. I did not chase an entry. I waited for a pullback towards a round level, the round level being 119, and I got in at 119.13. So I really like my entry point, and let's see when I exited the trade. I exited the trade at 950. I took a loss exiting the trade at 118.94 at 950. So at first, looks like I had gains, but I was looking for a move towards 119.60. That was my target. In hindsight, hey, maybe I could have sold here, but I liked what it was doing at the time, so I'm fine that I didn't take the initial profits because I thought it was going higher, and I stopped myself out when it did this move here, because to me there was no reason to come back down to my entry after having gone higher. That told me that, or it made me think that something wasn't right, and the target that I had was, not going to come to fruition. I had sat in it for 10 minutes. I allowed myself to make an adjustment to my stop after 5 minutes. My stop was actually a little bit lower, so I chose to exit above my stop, but I would have gotten stopped out because my stop was in the 118.80s and it did go down, make new lows, and then Facebook was just sideways and downtrending all day before recovering somewhat in the afternoon. So I like the trade. What I like most is good job not chasing and waiting for a pullback entry near a round level, which was 119. That's something you guys always hear me talk about, trying to get in at or near round levels. And it just didn't work. Started out good. So I have no problems with the fact that I did not take the small profits that were available because I was trying to hold for a target that I felt was realistic. I only needed to go up 20 more cents. I was looking for a 50-cent move, so 119.13s to 119.63 is what I was looking for. And the other thing I like is I like that I got out above my stop based on action that really concerned me. There was no reason to come back down. I had been in for 10 minutes, so I'm allowed to make adjustments based on my rules that I have for myself. And these are rules, by the way, they're written down. They're written down on my desk, and I have them. So when I say rules that I have, they're legit. All right, I'm not just talking about this shit off the top of my head. I have to stay in a trade for at least 5 minutes before considering an adjustment of my stop. So save myself some money by adjusting. And again, the whole thing with Facebook is I saw something that didn't seem right to me, this big move right down there, and that's when I made the adjustment, and it turned out to be a correct decision, which is always good. So that was over and done with on Facebook. Next trade was short FCX at 10 o'clock at 10:45. I remember this trade, and when I made this trade I felt kind of like I was kind of forcing the issue a little bit, but let's have a look and see how it looks now. Yeah, so this is not a setup that I really feel like was a great setup for me. So I shorted FCX at $10.45. The stock had gapped down, traded in a wide range the first 5 minutes of the day, and then started a downtrend, but it didn't make a new low. I got short right here in anticipation of it making a new low. Meh. I mean, it just kind of looked sideways. It was hanging around the opening price. Doesn't look like there's a great signal here. I end up staying in the trade. It's not an awful, I mean, it had been gapping down and was holding losses, but just from an intraday perspective doesn't look amazing. I stay in the trade for an hour. I got out at 11 o'clock at 10:47, just basically break even. If you look at the trade, so I got in my entry and exit. I shorted right here and I exited right here, break even. Now there was a move down, but it did not break to a new low, and I was in this trade and I kept thinking that it could break to a new low, but I really didn't have a ton of confidence, and I just kind of put a stop loss after 30 minutes. I said, you know what, as long as I'm above break even, I'll keep giving it a chance and try to be patient. And then once it started to come back above my entry point after 1 hour, then I just closed it off at more or less break even. So a couple things I like and a couple things I don't like. The thing that I don't like is it just doesn't seem like there was a very good setup here. What I do like is I like the effort to be patient, and I like the approach of as long as I'm break even, give it a chance. Because hey, you know, FCX could have very well broken down and gone down to $10.20, and then I would have felt great for being patient. As it is, you know, I'm not going to look at it as wasting an hour because I have a hard time staying in positions for an hour. So when I see this, hey, I know I can do it. And then the other thing I like is good job being disciplined to say that I would hold as long as I'm break even and then exit as soon as it went back above break even, just like I said I would. How many times do you tell yourself something and then you end up changing what you're telling yourself as the trade goes along? I did not do that in this case of FCX. So even though I don't like the trade when I look at it in terms of the setup, I like how I handled the trade once I did put myself in that position. Next trade of the week was on Amazon. I bought a call. This was today, June 3rd. At 9:35, I bought a call. So let's check out Amazon today. And what I liked about Amazon, number one, it's been strong all week. And I had a game plan pre-market, and my clients know this because I talked about it. I said if Amazon comes down to 725 or 724, just the 725 area within the first few minutes of the day, then I'm going to look at playing it for a bounce. And if you look at it, that's exactly what it did. So I got long right here, and the reason I got long is because it came down to that 25 to 24 range, and I felt obligated to do what I said I was going to do, and that is go long if it came down there. And so I bought a call, and it tested my stop a couple times. I stayed in there. I remember I was watching level 2 very closely, and you see this 724 level? We did undercut 724 for a moment, but on a level 2 there was no ask pressure coming underneath 724. There were no sellers there, so that told me, hey, stay in, give it a chance. I was at like a 15% loss on the time, which on expiration Friday, if you're going to trade an option, 15% loss is basically like a 5% loss. It's very small. And then got a great bounce back up, and I sold into this spike. So good job. I like that a lot. I like the way I attacked the setup I said I was going to attack, and I like the way that I took profits into the spike. And what was so important about this is as soon as I bought at 245 at 9:35, I immediately placed my sell order at 305. I knew I wanted to get a 25% gain. I knew that a 25% gain was possible if I got the 2-point bounce that I was looking for. So then once it did bounce, once it made this bounce back up right here, I got filled no problem. And what I'm very proud of in that fact is that you look at the next candle, it came right back down. So had I not had my sell order in, I would have gotten screwed because I wouldn't have filled. If my sell order wasn't in, I would have risked not filling. And then the very next candle, within 2 minutes, 3 minutes, it was right back down. So I would have been right back down to break even. Furthermore, if you look at this thing, it ended up dropping huge, and I would have been at like, geez, like a 75% loss within 15 minutes. So placing that sell order as soon as I bought into the position proved to be so important, and I really like that that's what I did because it shows preparation. And you know, when we prepare to do well, we have a better chance of doing well. So I like the attack of the setup that I outlined pre-market. I like the confidence to hold when it was testing my stop based on the level 2 action I was seeing. And most of all, I like that I put my sell order in as soon as my purchase order filled to ensure that if I did get the move I was looking for, I would get filled on the ask right away. And this proved to be crucial because the stock came back down in a hurry and I could have got screwed. So good trade. Alright, trade number 5. I shorted a naked put on Facebook on June 1st. I shorted the 117 strike put on June 1st, and I shorted it at 2:38 in the afternoon. So this was Wednesday. 2:38 in the afternoon is right here. And at this point, I just had confidence that Facebook was going to be closing above 117. If you look at the daily chart, 117 had been support this week, and late last week did a good job getting bought out of the 117s. So I like it. Never want to call it free money because I think it's very risky if you start calling things free money. I shorted it at 24 cents, covered it at 6 cents today. They ended up expiring worthless. But it is low risk from the perspective that the percentage of these going in the money was very low at the time I shorted them. I think it was like 15%. And Facebook, I was willing to be a buyer at 117 this week. That is the level that I've had in my notes as, hey, go long Facebook at 117 the first time it gets down there, and then stop out if it continues to go down. So naked options, they have a stigma to them because there's a lot of theoretical risk. For example, when I shorted this, if Facebook goes down to 110, I'm immediately down a lot, and I'm only trying to make a small gain since I'm only collecting 24 cents. So in theory, there's a lot of real risk, a lot of theoretical risk in that situation. But in reality, when you look at the stats and how often something like that happens, it's very rare. And furthermore, if it would have started to go against me, I could have just shorted stock in Facebook. If Facebook started tanking, I was prepared to short 100 shares to essentially make this a covered put, I guess would be the expression. So bottom line, I like this because I think it's a high probability trade. So good high probability trade on a stock I can handle. One of the reasons I like this on Facebook is because I can afford to match the position by either taking on the 100 shares if exercised or shorting 100 shares as a hedge. So I've started to do this on Facebook, or trying to do it more on Facebook, because look, I only got 25 cents. Maybe if I go do Amazon or Google, I can get a whole $1. But then if something goes wrong, now I need to shell out 70 G's worth of cash and take out margin, for the hassle. With Facebook at 117, I'm only shelling out $1,100, $11,700. So again, theoretical risk is high, actual risk, in my view, pretty manageable. Naked options aren't for everyone, but for me, I like this trade. So I like this trade and think I should look at stuff like this more often. Trade number 6, I'm not going to spend much time on it at all. It was a total force trade. I was just a total asshole this afternoon. I got bored, or I guess it was just before the afternoon. I got bored and I was just like, yo, let me make this trade. I didn't even have a stop, so I just sold at break even. So just a reminder, don't be an asshole. Don't force trades, man. You're better than that. Especially on a Friday. Because then if something goes wrong, you're thinking about it all weekend. Look, if ever you're going to be an asshole, and I refer to an asshole as just somebody who makes asshole trades like this one where you just force stuff. So if ever you're going to be an asshole on Monday. That way you have all week to not be an asshole. I'll leave it at that, right? Alright, so just a dumb trade. So takeaways for me, I was extremely selective And I like that because in general, I think that I make a lot more trades than I should each week. And if I really focus on only the really good setups, then my win rate increases, my average win to average loss ratio increases, and my profit factor increases. So keep that idea of quality over quantity in mind. Some other things I like is that, well, one thing I don't like, still getting distracted sometimes. You know, Facebook trade number 6 and FCX trade number 3. Nothing bad happened, but again, just that's something that creeps up with me. There's at least 1 or 2 trades every single week where I feel like I just get distracted and don't do something that I should be doing. So just making a note that still seems like you get distracted a little bit, and that could come back to bite you one of these weeks. So be careful. I think I've done a better job, but one distracted trade is all it takes to do something awful. Grade wise, I'll give myself a C+. I think, you know, the positives, I like the selection. The negatives, though, there were a couple times where, especially today, I could have done another trade. There's one trade that I'm thinking of that I looked at really closely and should have taken it because it was a good risk-reward setup. It was a good signal. Everything came together. So, but I try not to talk about trades that I didn't end up actually making, so that's why you don't see it here. But that's why I got the C+. All right, so as always, you know, I encourage you guys, review your own trades. Somebody asked me the other day, well, how does this help me if I'm looking at you review your trades? These aren't my trades. Well, to that person I say, look at the way I'm objective. Look at the way I critique myself. Look at the time that I put into studying my orders. Take all of that. You can learn from that and apply it to your own trading. It's a Friday night, all right? My friends are out. They're at dinner. They're going to get beers. What am I doing? I'm sitting here. I'm trying to get better, okay, because I'm hungry for this. This is what I want. So you got to put in the time when the market's closed, and that's what I hope you're getting out of this.